Hello and welcome. Today, I will teach you a highly effective and easy-to-use technical analysis strategy called Q signals. I have prepared a video from my YouTube channel where I explain this strategy in detail and demonstrate its high success rate. The strategy is based on two critical elements: not opening a trade immediately after spotting a buy-sell signal, and waiting for a specific move called the valid pullback to occur. -1 by a clear engulfing candlestick that neutralizes the pullback. When these two crucial and straightforward rules are met, we enter the trade at the closing level of the last engulfing candlestick, with a minimum risk-reward ratio of 1 to 1.5. The stop-loss level is placed below the last swing low for long positions and above the last swing high for short positions. If the 1 to 1.5 reward ratio is achieved, you can close the entire trade or partially take profits, while moving the stop-loss level to the entry point, aiming for higher profit targets. Let's start with our first example. As you can see here, we have a short signal from the QQE Mod indicator. Of course, after spotting this signal, we will plan our entire strategy based on a selling direction and wait for now. After the price bar where we saw the short signal, a valid and clear pullback movement occurred. I would like to remind you once again that I have defined the concept of a valid pullback. After years of research, in a valid pullback, the reversal candlesticks that form during the pullback movement must be large enough to engulf the candlestick that generated the buy or sell signal. Please pay attention to this important rule as well. The candlestick that we enter the trade on should also be an engulfing bar that engulfs the pullback candlestick and additional last candlestick, if present. Thanks to paying attention to all the details before entering the trade, it turned out to be a profitable trade. After achieving a 1 to 1.5 reward ratio, you can choose to close the trade entirely or continue with partial profit taking. If you opt for partial profit taking, please remember to adjust the stop-loss level to the entry point. Let's look at a different example. We see another short signal, and we are starting to plan our strategy in the selling direction. Oh no! While we were forming our selling plans, the market suddenly experienced a strong buying pressure and reversed, giving us a long signal from our indicator. In that case, we immediately cancel our selling plans and set up our game in the buying direction. Let's take a step-by-step look at the instructions. Dear friends, as you can see, this strategy is actually very simple and profitable. This trade has also been successful. As you may have guessed, I have displayed the short trade that we initially canceled as an example. This is to provide you with insights on which trades to pursue and which ones to avoid. In the markets, things don't always go as planned, but with knowledge and experience, you can avoid losses. Now let's make our video flow more smoothly, but please make sure to watch it without skipping. If you want to consistently profit from the markets throughout your life, and perhaps even achieve significant gains as a successful trader, the first rule is to diligently follow your education step by step. In this example, we once again see a pullback movement that adheres to our rules. After the long signal, we observe small body and low volume green-colored doji candle bars, which are then engulfed by red-colored doji bars of the same style. The visual appearance here aligns with our rules, but I must be honest and say that I do not trust such a pullback formation and would refrain from entering a trade. Nonetheless, let's examine the situation that follows this formation. Despite appearing risky to me, if a trade were opened, the price reached our standard target level. We spotted a short signal from the QQE Mod indicator. Let's closely monitor its development. As you can see, the pullback movement here unfolded very clearly. It formed an engulfing candlestick pattern consisting of two parts. Subsequently, a red bar engulfed the last bullish candlestick, providing an excellent opportunity for trade entry. Please pay attention. Just as all the conditions developed so clearly before the trade, the progression of the trade itself unfolded flawlessly.